Yeah, interest rate volatility is really, at the highest for the year. Equity volatility is high as well. Really, in terms of tomorrow, the best potential outcome for markets as an investor is to see a divided government and a clear outcome. So one party in the executive branch, a different party in Congress dominating, that will create some gridlock and hopefully create some fiscal discipline. I think that's what you should be rooting for, irrespective of your politics. If we have an outcome where we're not totally sure what's going to happen, if we have civil unrest, I think you're going to see volatility spike, even from these elevated levels. So people are on edge, and I think for a very good reason.
Indeed, whether it's VIX equities, move bonds, or even skew, right? Things are spiking on vol. I get that. Christian, in the event we don't get the ideal outcome, right? That is quick, clear, decisive, maybe even a landslide, and then divided government as well, which, leaves businesses going, well, this is great, right? You guys argue among yourselves, and we'll just get on and do our businesses and make money. In case we don't get that, in case, let's say it's a red sweep, right? Talk us through the implications here, because this is where it gets kind of muddy. We were led to believe that, regardless of who wins, right, we're talking about the deficit not going away, the debt not going away, record treasury issuance, higher yields, and that's going to back the Fed into a corner, right? Is that necessarily the case? Because we just had one guest on early this morning saying, look, if the deficit becomes even more of a problem, that could lead to a softer or weaker dollar. Which is it?
I think immediately, again, you've seen some sell-off in the dollar today, but the dollar's been very strong heading into the election. I think, again, you're going to see some of these trends reverse, as I think you probably get a sell the news event. So I think you'll see that in interest rates, you'll see that in the dollar. In terms of a red sweep, if we get that outcome, one thing that's interesting about that, before this last batch of polls where you saw Trump, really ahead in the polls, you saw a lot of, quote, Trump trades doing very well in the market. But the interesting thing is, we know what a Trump presidency looks like, or at least what one looked like. And if you go back to that period of time, if you were in the markets, you remember an extended period of time where tariffs and tariff fears were really the factor driving volatility and risk premia throughout markets, in terms of what the timing was going to be, how severe they were going to be, what industries they were going to impact. So the interesting thing is, it seems like the market is having a selective memory, where they've been excited about potential beneficiaries of a Trump administration, but actually conveniently forgetting some of the industries that were negatively impacted by that era.
Christian, if it is Trump, what about the tariff landscape? If it's 60% plus China trade tariffs, 10% on the rest of the world, just how inflationary could that be? And do we see the 10-year yield retest 5%, if not higher?
I don't think we see that immediately. It certainly could be inflationary, but again, we've already had a pretty substantial move off the lows from just a couple of months. So I think some of that is priced in. And again, I think once you have a clear outcome, that will temper some fears. And I think the administration is broadly going to look around as well and seeing, what's happening in the markets. And my hope is that if you're seeing some areas of the market that are clearly struggling and, have a tremendous amount of fear, that maybe that rhetoric gets dialed back somewhat. Clearly on the campaign trails, either candidate is incentivized to really heighten passions, to dial up rhetoric, and generally, once that's played out, you hopefully see, cooling heads and, more tempered attitudes take place. That's certainly the hope.